advisory insights for investors and the populace to understand the trends of the financial and capital markets and what to expect in the economy. It also helps you make the best choice in investing. And today on our WebTV market review, the last for this week, July 3rd, 2020, today is Friday, we'll have a discussion around the United Capital report, looking at the second half of this year, which we're already in, and what we should expect. It's called Up in the Air. Interesting report to look at. And with us to lead this conversation is Mr. Wale Olusi, Head of Research, United Capital. And also joining us is our co-anchor and CEO of Frontier Africa Reports, Mr. Boason Omofaye. Good morning, and nice to have you on the show.
Good morning, and good morning, Mike.
Yes. Good morning, Gabi. Good morning,
Well, we've gone through the report and it's quite incisive. Look at the capital market, that will be our core focus today. But tell us, this period of the pandemic, how has it been carrying out research and analysis? Just for a start.
Thank you very much. I like where you started from. I mean, it kind of puts a human face to our own job, as analysts, vis-a-vis, the realities of COVID-19. So what we will normally have will be a situation where the analysts are in-house at the office. At times they take their job homes, the report is written, the data is gathered. Occasionally you go out to, sample opinions and hear what some policymakers and some of our clients who are close to government and, all this policy making, but this time around, most of these are done at home or via Zoom. After the report is also written, what we will normally have is, a boardroom session where all the analysts will be seated and then we go through the report page by page. We read line by line, but this time around, the realities are a bit different. We are not allowed to sit in a box office looking through a report, line by line or page by page. So we had to do all of that remotely. But because we were not traveling to work every now and then, everybody was working remotely, maybe it gave us a little bit of more time to ponder on the work, a little more flexibility as far as the timelines are concerned. So somehow we're also able to make up on time because this time around we're able to publish 1st of July. Previous reports we've been doing about mid-July, but somehow we're able to do this early. So it's challenging, but I think it's interesting also.
Very interesting and remarkable that you published this 1st of July. And so let's look at the first issue of interest from that report as it concerns the financial market. I know Mr. Boason will look at this. Prior to this interview now, this conversation, we discussed prior to this about this pandemic. It's worse than what was experienced in 1917 and 1918, the Spanish flu. And now we're seeing over 10 million cases, over 500,000 deaths, and over 5 million recoveries. But from your report, you said the possibility of a COVID-19 second wave and can bring a downside risk to global financial markets. We saw from the report that there was that initial March period where we had this very unprecedented crash, trillions of dollars lost in the market due to this impact and disruptions from the pandemic. If you can give us further insight into this, now that we're even seeing that the New York Stock Exchange, I know Mr. Boason will be aware of this, Stacy, Cunningham are beginning to try to reopen activities just to begin to build up the market activities. The US is so eager to reopen. But again, Dr. Fauci, the equivalent of the NCDCDG, is saying, look, be cautious because reopening, you have to balance health and economy. But just give us further insight into this second way, because that is a major concern for the global financial markets. Mr. Wade.
Okay, thank you for that question. And I think that's what's made up the most important trust of the report, and the title Up in the Air, which basically signifies uncertainties. And the realities of what the virus brings forward in the second half of the year, is such that the territory we are, heading towards is still largely unmapped. Nobody still know if the second wave will come or how it will come. There's still so many uncertainty, and not only in the field of public health, but even in modern macroeconomic policy management as well. So, I mean, for GDP, it is beyond whether there's going to be a contraction of output, because like you mentioned, the threat of a second wave is still very, very real. And even if it's not a second wave, the rate at which it is increasing in some of the emerging markets, where the numbers are a little bit suppressed before, is on the higher. If you take Brazil, Russia, China, India, okay, China is out, but India, some of these large economies, the numbers are increasing there. And if it affected the West, the advanced economy that much, then the next big economies that we want to worry about in the global economy will be the BRICS economy, and it can weigh down everything also. So there are many forecasts that will be accurate and not be accurate in this second half because, for example, the properties of the virus are still not well understood, even up till now. We are not sure of the role of the patients that are asymptomatic. Recently, World Bank is saying those guys, cannot transmit the disease. But nobody wants to stay near anybody that have corona. We are all still wearing masks, and in my office, we are doing about 50% capacity. And if you have any form of excuse, you are allowed to stay at home. So in some countries, testing is limited and so on. So, the question of the time part of the economic shock created by the virus and how recovery will be, all of these are still very, 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 very blurry. So the outlook is still slightly cloudy or clouded by the fact that this virus is still very much in the air, and what we can only do is to find ways that we will cope, and then how companies, individuals, governments will adjust. But we might not be seeing the kind of growth that we were seeing before until maybe a vaccine is found. Thank you.
Okay, so I mean, I hear you, Wale. The uncertainty is there in the air, and the monetary and fiscal policy responses across the globe is very important. I know you're aware of the way Mr. Jerome Powell, the chairman of the U.S. Federal Reserve, has been responding for the U.S. and Bailey, Bank of England governor, and of course here in Nigeria, a central bank governor, Mr. Godwin Emefiele. I think it has been a period for central bank governors across the world. They are so busy. I know Mr. Boason has been following much of that. But Mr. B, let me leave it to you to make your intervention.
Well, thank you, Otto, and thank you, Wale. I think as far as the virus is concerned, as a journalist and as a business journalist, I'm getting a bit of a sense of where we're likely heading. It's unsure, but I think the initial shock of the virus into the global economy and global leaders, the initial shock is over. So the initial shock that we have this on our hands, what are we going to do about it? Where is it coming from? Where is it likely going? I think the world leaders are getting the hand of that already. So the reality that this pandemic is here, we have to do something about it from a human life, health matters point of view. Are we going to have fatalities? Yes. Will there be increase in rates or whatever? Yes. And are we going to have a vaccine or drug for it at some point down the road? Okay. So all of these are giving fiscal leaders, policymakers, business leaders some incentive to go into the drawing board and begin to look at the economic and social solutions to it. That is the second side of it that I am seeing. Yeah, overnight, the AFDB, with some other multilateral development banks like the IFC, which is the private sector lending arm of the World Bank, the World Trade Organization, and I think about 3 or 5 others announced that they are expanding the size of the trade finance support or the funding support for the global trade finance. So globally, these multilateral institutions and the DFIs are seeing that, look, this pandemic will be here. There's a big disruption to global supply chain. There's a big problem with funding SMEs and those who will have to be productive, and trade finance. All of this is getting these big institutions to begin to think outside the box and see areas where they need to quench the fire, or as it were, or contain it, the impact of the virus. So I am convinced that in the next 3 months down the line or so, policymakers would have had a better idea of what the impact will be, where is it going to come from. Right now, we have a very fair idea that first, aviation, tourism, and all are part of our social life and all that will be the major hit. Anything that can bring people together or get them to congregate on the beach, in a disco hall, in a nightclub, in the restaurants, in the theater, what have you, we know that that is how pandemic spreads. So we know what will happen to this. Offices, like Wale said, not more than 4, 5, 6 people sitting in a box office, is a whole rewriting of the DNA of our lives in human history, that now we're taking work home, and even at home, we have to be very careful that we don't bring the virus home from outside if you ever step outside of your house. That is a whole change in our the DNA of how the world community works and live and play. So we're getting a bit of that. So I want to say it's a great job to find firms such as United Capital able to put a report together remotely, which addresses these serious issues. But let's move on to save time. One of the key things I found in this report, and which has been an issue, has to do with foreign exchange availability, liquidity, supply, and demand, and how it affects our markets and the various financial assets. 2 days ago, Moody's Africa released a new report on Nigerian banks and said that there's a very shortage of dollar liquidity with the Nigerian banks, and this could be a problem down the line for Nigerian banks, because the FX deposits they're taking in, all revenue is low for the country, and then folks who make deposits into domiciliary accounts, there are issues around this. Wale, could you shed light on this for us?
Okay, thank you for that question, Boason. And I mean, Moody's is spot on. I mean, because most of what you have in terms of foreign currency revenue to the banks, even if they are coming in, they are not coming in as fast again. CBN, on their part, they are also very, very careful in terms of how they manage dollar liquidity. And for FPIs who are currently here, it looks like demand management is back in play. Rather than give everybody whatever they want so that they can go outside the country and take their money out of the country immediately, it looks like the central bank is staggering it. Reports yesterday came out about $370-something million. That was the only reduction in the external reserve in the month of June. Now, if you put that side by side, the amount of demand in the books of the CBN is probably about 2 billion. So 2 billion versus a reduction of 300 million. Somebody is trying to manage what goes out and trying to hold whatever is in as much as possible. So for the banks, the only thing I would say is that some of them have been smart enough to take out some of the huge liability in form of Eurobond that they were holding last year, almost as if they saw this coming. Many of them actually recalled their Eurobond liabilities. So for those who have significant dollar assets, 2020 might be a good year for them compared to dollar liability, because with a devaluation, then their currency translation gain will support their earnings. But for those who are still holding on to significant dollar liabilities, then they will have some head scratching to do. I think that's why Fidelity Bank is making moves now to see if they can also recall now, because to be honest with you, there's still pressure on the Naira. If parallel market rate is doing 450 or thereabout, and the official rate is around 360, 385, depending on which markets you look at, and the World Bank is asking you to unify all of these rates, then there are still clear issues around the currency in the country. So, I mean, it's a tough one for the banks. Their revenue numbers are going to be pressured. Yields across board is, very, very low. The loans are even difficult to give out now. And those of them that want to give it out, the central bank LDR ratio policy is forcing
5%.
them to reduce, that rate on their loans. Maybe the only thing they will gain is the fact that their cost of fund is a little bit cheaper.
Okay.
So it's a tough one for the bank, but I think a good number of them will report a flat performance for the year.
Okay.
Yeah.
Okay. All right. So the FX, the pressures are going to be on revenues of the banks, and of course, there's need to again to revisit that space in terms of how the foreign exchange management is done. So, Mr. Boason, you can continue.
Yes, the FX story is very interesting, and I'm just trying to find out from Wale, what's the prognosis in terms of where we are at the moment, and how soon do you think things will get worse on the FX side? If yes, how soon would that be? With the oil prices now around $40 a barrel, trying to hang around that level. We did a revision to our fiscal outlay, but then we have a second a program on hand. Apart from the national budget, we have the economic sustainability plan, 2.3 or 2.6 trillion naira. We have to fund it. So all of this will require dollar inflow. Do you think we have what it takes? How much longer do you think we can hold on, or do you think the financial regulator will be able to hold on between now and the end of the year, or do you think they can weather the 2020 and just hope that something better happens by 2021?
Okay, so the FX discussion is always a very, very heated one. And I mean, you can't blame anybody. So what I will look at, first of all, is the size of, foreign portfolio inflow in the country. If you look at the Omo market, where the central bank has increasingly, been selling Naira to foreigners, foreign portfolio investors, just to get dollar inflow. About 40 to 50% of that liquidity in the Omo market, or maturity in the Omo market, is basically from FPIs. Now, if they take that money, we are talking about 5 to 7 billion, everything, if you take them all out, take that away from 36 billion external reserve, it brings us to about 38. Now go to 28. Now go to the oil story. The real headache around oil is that with COVID-19, nobody is seeing oil prices above 50 or 60 again. Maybe 40 is the most realistic forecast for the rest of the year. So inflow into the external reserve in form of oil revenue or oil proceeds does not look too interesting. The only interesting thing is probably, apart from the IMF loan that we've collected now, maybe if we are lucky to get the World Bank loan, if we are able to meet their demand in August. And then there's another external loan from World Bank again for the state, based on the meeting that the Ministry of Finance as well as Central Bank had, that was facilitated by Citibank recently. We know that we are now approaching the Eurobond market again this year, but there are a number of facilities we are expecting from World Bank. Altogether maybe about 3 billion. If you bring that in, I'm suspecting with the help of that and the fact that Central Bank will manage this, we might be able to hold on, the exchange rates at the current level, till the end of the year. But our fear is that every time there's a crisis like this, and we can only leverage the benefit of that hindsight, what Nigeria requires every time we have this kind of distortion or shock is about 40% to 30% devaluation. And if you work your way back to 2014, 2016, we moved from about 160 to 200. Central Bank tried to hold it at 200, for a while. Eventually they let go. It went to 280. And then eventually, when we couldn't control it, we all settled at around 300 for the official market, and then 360. But that's after things have gone out of way. Now, this time around, all we've done is about 15% adjustment. But oil prices have dropped more than 30% or so far. So it looks like we need about 10 to 15% more further adjustments for you to be able to take the currency to where it should be for comfort to return. Or if we are lucky, something happened and oil prices jack up back to 60, then maybe that concern will not be there again. But our forecast, it looks like about 400.
Yeah. So technically speaking, if you have if we hit some jackpots, $50, $60, okay. Then if the 3 billion or so external monies do come in, maybe then the regulator may have to let go a little bit, do maybe that 15%. But I'm not too sure it will be done when the pocket is dry. So maybe when some inflows are in there, because again, you need a basis for doing those adjustments.
Yes.
Because once you let the bottom go a little bit down, you have to fill it at the top with something. If not, it's going to be very, very bad. But let's get back to the markets proper. The healthcare sector, I'm surprised and I'm feeling very unhappy with myself that perhaps I should have bought Neiman Pharmaceuticals last year. I think I'm going to get much better at looking at the Ouija box and try to find out where is the next problem happening. Boason, go there, pick up the stocks. 140% year to date on Neiman. That is out of this world.
Actually, as at mid-June, Neiman has done 274% as at mid-June. 274%. And across all the healthcare sector, Maybaker has done 63%. Echo Corporation with hospital has done 41.2%. 36%. Morrison about 20%. And Fitsin, GlaxoSmithKline, more than 16%.
Yeah.
So it's a huge jackpot for the healthcare stocks. And I mean,
I tell you,
personal hygiene is the big thing, and and of course, healthcare, given the public health crisis. So I think investors just took the bet. And
so knowing that this pandemic will likely be with us a few months or so, or maybe a year or so down the line, we hope to have a vaccine. Even when we have a vaccine and a drug, do you think that healthcare stocks or pharmaceutical stocks in the healthcare services, whether they're hospitals or diagnostics or those who are doing pure vaccine and drugs locally, should remain in investors' focus in Nigeria?
I think for the next couple of years, I mean, this pandemic doesn't look like it's going to go away soon. We can only find a way to manage it. So yes, I mean, if coronavirus can bring the entire global economy to a halt, like you said, in the history of the world, this has never happened. We were having that chat earlier about, bringing work to the home. Not even during the Spanish flu have we had something like this. That tells you how important healthcare is, and we've all grossly underestimated, the capacity of, a virus to actually bring our life to a halt. So clearly, we are going to definitely be taking our healthcare much more important going forward. And it's not just only the hospitals and the pharmaceuticals. Even all those products that has to do with personal hygiene, they are all going to be, going over the roof now, because all of a sudden I realized that merely opening the door, poses a threat to me. So I probably want to spray it before doing that. Hand sanitizer, soaps, cleaning services. In my office, they clean this place twice a day.
Maybe I should look for how to float one of the cleaning companies on the stock exchange.
Maybe you should.
Because if you clean your office twice a day,
maybe
I'm sure Crochet does the same. Because you need to clean surfaces, you need to sweep and be sure that nothing a little bit you don't want to sit in a very damp environment,
Yes.
which we used to enjoy before. Very cozy, isn't it? Now
Yes,
you want
I overheard one of the senators.
Sunshine to come in. So maybe this is the time. Otto, where are you? This is the time for us to begin to think of maybe somebody should just do some IPOs for some cleaning company, sanitation. That is what you're talking about.
Yesterday, one of the senators was saying you can't have the schools open without disinfecting all the schools. Imagine how much money you will spend to disinfect all the schools in Nigeria.
Before disinfection,
if you disinfect all the streets.
I was driving by, I saw one public primary and secondary school is all overgrown with weeds.
Correct.
I'm sure the reptiles will be there, will be having fun. All over, you know, the state of our nursery, primary and secondary schools in Nigeria, some of them who are in remote towns and villages. You can imagine how they are now with bushes. So who is going to clean them? I'm not sure the education ministry is thinking about a fund for that yet. Because you can't take kids back to school and ask them to pick up cutlasses and hoes and be the one to clean the school premises. No, somebody has to do it, but that's a conversation for another day. Sorry, Otto, for bringing that in. But I think I just want this to go out to the authorities that all the schools have to be sanitized, like Wale says, but beyond sanitation, the cleaning that will have to go into those schools is something to think about. So healthcare will remain number one.
Very important. I mean, healthcare will remain number one, but let's look at the equities market. I mean, from the report, it showed that the NSE benchmark index closed for first half of the year at 20,669.4 points. And of course, your report has showed that second quarter 2020 corporate earnings will not be really impressive. It will be depressing numbers. Well, we're still optimistic. And then for the second half of the year, we're looking at 4.1 year to date in terms of the points, 4.1% year to date in 2020 end of year result. That's a decline. I mean, can you give us further insight in this? Because we are asking, like you said in your report, can this rally be sustained for the equities market?
Okay, so for the equities market is an interesting one, and the results, regardless, you know, there's going to be interest in equities, and the reason is simple. People want to enhance the returns on their portfolio. If you look at the yield there is nothing to write home about. If you do an NTB or a treasury bills with a bank now, they are going to give you 1 to 2%. You know, even Omo has crashed to about 5-6% now. If you want to go a little bit longer and bond, maybe you'll be getting 10-8%. Our mutual funds, you know, is one of the best in the market for money market fund, is about 6-7%. That's because all the yield have crashed. If you place a fund with a commercial bank for fixed income, fixed deposits, you know, they are going to give you about 2%. So how else do you enhance your return? So regardless of earnings, what you will see is once the market is sold down to a particular level, people start buying again. And that was what happened in March. Inside the pandemic, people were buying stocks all through the month of May, you know, and the month of May, the market was up about 10%. It took out the losses in March by more than half. In June, we have started seeing sell-off, about 3% down in June. The sell-off we are seeing now is because people want the results to come out first, let the negative reaction go away. But I bet once you start seeing your GTB below 20, those prices, yes, the bank's performance may be pressured, but their return on equity is still going to be at advantage of low prices. Once it climbs, they will sell. So it's a little bit more active here for those who want to participate. We think the market is probably going to close, base case scenario, about 4% negative. If there are good news.
Okay. All right. I mean, that's interesting. You mentioned the yield environment. I know Mr. Boason has been always talking about this and concerned about it. Mr. Boason?
Yeah, the yield side, the buy side, the sell side. We've kept foreign investors happy for so long. They made 8%, made 20% of this market. Now it looks like the party is over. Do you think the authorities are now beginning to support more of the macroeconomic side and tell foreign investors, yes, thank you very much, but then we need to fix this economy? What are you seeing on the horizon? Are we likely to hit the zero level on the treasury bill side?
Okay, so for the treasury bills as well, I mean, I think the government is just having fun right now because it's so cheap for you to, get all those borrowing at almost 0% interest rate. And I think, for the domestic, we're 4 months ago in time, and government was spending a lot of money just to get treasury bill, but somehow the central bank has been able to skew, that dynamics in favor of, the government. And I think they're going to make that for as long as possible. But what we suspect is that from October 2020, that was when the central bank did this separation of who gets OMO and say, okay, you, United Capital, investment banks, portfolio managers, pension funds, you can't buy OMO again. Only banks and FPI are the ones that can buy. What we suspect that, by October, that you will now have OMO bills only in the hand of banks and FPIs, no non-bank financials or corporates or individual will be holding again. What we suspect is that there will be some adjustment, maybe a little bit of a spike, because at that point, the liquidity dynamics will change a bit. And then maybe, but we don't think NTB rates will go back to double digits anytime soon, like we used to have it.
Maybe not for this year, Wale.
Maybe not this year, exactly.
Maybe not this year. Because again, if the central bank is paying on this, helping the government to pay little for taking cash out of the system, again, this is part of inflation management, isn't it?
Correct. Yes.
Because we don't have so much productive activities in the economy.
Correct. There's not much productive activities. And if you produce, who is going to buy it? People are losing jobs. People don't drive as much. So the oil marketers are probably struggling with lower demand now. I saw Q1 oil imports yesterday. I am eager to see the Q2 imports. So, if you look at the aviation sector, nobody's traveling anywhere. Revenue is grounded there. With job losses and salary cuts, it simply means that, demand, people will be more selective in terms of, where they put their money, maybe on necessities. So, demand is not as strong despite everything that government is doing. So both fiscal and monetary policy, they will be very, very focused on stimulating growth rather than inflation. So the only thing they can do is how to keep interest rates low. That is more pro-cyclical in terms of stimulating growth, rather than looking for ways of adjusting interest rates, on time or to double digits again. That doesn't make any sense in a recession. You want to keep interest rates low to stimulate growth.
I agree with you.
Okay, so let's look in a few minutes at what will really shape the market and its performance in the second half of this year. Look at issues around system liquidity in second half of 2020. Is it going to thin out in terms of what has been postulated from your report? FPI inflows, I mean, Boason has been talking about this over time. Q1 2020, the capital importation report shows that FPI still dominates importation. That's the capital importation index for our country. And so what's going to happen to FPIs? You know that FDIs are still low and need to come up, but the concerns around the FDIs, I mean.
Also, I changed my stance. I'm on the side of FDIs now.
Good, better. I mean, that's better.
I want FDIs now.
That's better.
Yes,
Okay.
FDIs are always better. The FPIs, we call them fair weather friends. They only come and stay in good times. When they smell bad time, they flee. So yes, as a Q1, they still dominate. But if you look at what has been happening from April till date, when I spoke with the guys in my brokerage unit, what they keep telling me is that FPIs are not coming. They are not here at all. And the concerns are very easy for them. So long as they keep seeing a huge spread between parallel market exchange rate and the official rate, FPIs are not going to, risk it. Why should I risk getting a 10% return on maybe Omo bill rate? So that's tricky. They won't come in until they are sure that the concerns around exchange rates are out of the way. And if you look at 2017, that was what happened until we came up with the idea of the I&E window. Remember, at the parallel market rates, at the parallel market then, Naira was trading at around 500 Naira to a dollar. It was that bad. We are in a similar situation now, and until that is resolved, I don't see FPIs, coming back. So that's a little bit of a concern for the rest of the year. So in the domestic market, what that will mean is that the domestic investors are still going to be the one, driving activities, because liquidity, money supply is still going to be a lot. We will continue to see interest, but I think people will just be much more concerned about the safety of their investment rather than return. So what we think we continue
that's
to
where I go, capital preservation.
Yeah. Correct, capital preservation. So people will gravitate towards mutual funds that offer decent returns, at secure position. This year, for example, our bond funds are by about 100%, because that's where the yield is most attractive. So we've seen a lot of people move away from money market to bond fund. I think, you will probably see more of that. For those who need liquidity, you buy more of money market fund, because that one you can take out your money in about 1 month. The bond fund, you need about 3 months to stay before you can do that. For those who want to enhance their return, like I mentioned earlier, they will be very careful. They will take advantage of, downturn in the stock markets. Once the prices are down, they will buy it and then wait for when, everybody wants to buy again, and then they will exit. Those 15%, 20% return in a space of 1 month, 2 months in the stock market help them to enhance, their return on their other funds. So it's a very, very active year for investors. You have to think, creatively and go beyond your traditional investment. What I've also heard people say is that maybe we should start looking at alternative investment. Well, maybe Sukuk works because we did about 11% coupon.
Finance.
Correct.
Yeah.
We did about 11% coupon on the recent Sukuk that the federal government sold. What other alternative do you have? Do you want to go into real estate? That's tricky because with the pandemic, real estate is even more difficult right now. With working from home, we just moved to a new office in the United Capital, and to be honest with you, we don't really minimize the money we spent on that new office in the last 3 months. The bulk of our staff have been working from home, So most of those commercial buildings are going to be vacant for a while. So even real estate, the yield on them are not going to be that interesting. The occupancy rate across hotel and hospitality businesses, they're very not traveling and moving forward.
Report and for coming on the show to drill down into these specific areas. Thank you so much.
Thank you for having me, Boason. It's always a pleasure.
Well, in just 1 minute, I would like you to talk about the global macro developments and how it will impact the market in the second half of the year. Particularly, you may not want to really delve much the US elections. That may also fuel FPI inflows.
Into Nigeria. Well, for the global markets, so we also see, some possibility for funds to flow. They will just be looking for where to put it because, see, across the world, everybody is cutting interest rate and, the monetary policy stance is accommodating. So beyond the election, if you look at Europe now, apart from Italy, the yield on bond there is negative across board. All central banks are cutting rates, they are doing QE. So to be honest with you, investors will also be looking for where to put that money, but at the same time, even though they want to be a little bit careful, they don't just want to lose the money in an emerging market that the devaluation will take out all the return. So there will be that possibility for them to look, but we need to get our hearts together for us to be able to attract it. If we're able to get our hearts together and we're able to take adjustments that are very, very bold, maybe otherwise they will just look for countries that are willing, to do it. Maybe some of those on the list of EU's recently announced safe countries to fly.
We're not included, but well, it's just to note that it's very important that we also leverage, like Boason was saying, foreign direct investments, and hopefully our policies will align fiscal and monetary to encourage that. But thank you very much, Mr. Wale Olusi, for the time. I mean, I must commend you for speeding it up and making it 1st of July to produce your report. And Miss the Pandemic shows the work ethic that you are putting there. And congratulations, you moved to your new office building, and that's an interesting time. We look forward to a very interesting period for the markets amidst all the indicators that are challenging. And for Boason and Omofaye, thank you so much for joining, and go and and we'll continue to.
Thank you very much.
Thank
you. On cash market and economy. And that'll be all for this week edition of the
WebTV Market Review. Has been an interesting week from Monday to Friday today, discussing developments around the financial market and capital market as it impacts the economy. We'll continue this next week. You can join our website, www.prochange.com, to watch our videos with our news reports and analysis. Till we come your way again, thank you for watching. Have a nice day and stay safe.